Hello, and thank you for downloading another episode of Your Life Simplified. My name is Brian Leitner, and I'll be your host of this episode. So for those of you who have been listening to the show for some time, you know that we ask our audience for topics, questions, suggestions, anything that they may have on their mind. And one of our listeners emailed us in a question regarding your domicile and how do you change your domicile, why you'd want to change your domicile. And so we're going to answer exactly what a domicile actually is. And today I'm joined by Adam Cots, a senior wealth advisor at Mariner Wealth Advisors, to help us answer some of these questions. Adam, thanks for joining us on the show today.
Thanks for having me, Brian. Glad to be here.
So Adam, just in way of background, maybe spend 60 seconds. Can you talk a little bit about your background and what you do?
Great. So I've been working for around 20 years. I'm a CPA. I've been focused on tax, mainly in the individual space. I've been with Mariner for the last 6 years. I'm currently a director in the New York City office, and I work with clients, helping them with their investments and with taxes.
It's great. Again, thanks for coming on the show. So we get questions from clients on a regular basis. Obviously, as I said, one of the listeners emailed us in a few questions. So they're questions regarding their domicile versus maybe where they live. Can you give an explanation on, what is the definition of a domicile or one's domicile?
No problem. Domicile is really where your heart is. It's where you want to be. And that's what most states consider where your tax home is. So you might have multiple homes, but really where your heart is and where you tend to be with your family, holidays, doctors, that's where your tax domicile is at.
So as it relates to domicile, what are some of the major impacts of being domiciled in one state versus another?
Where you're domiciled is going to dictate where your income taxes are paid and also possibly where your estate taxes are paid when you pass away.
So that's important. And there are a lot of people that decide to retire somewhere else, right? They're working maybe in New York or maybe in Kansas City or any state, and they want to retire to a different state because of the weather or because of the better tax rate or those sorts of things. So taxes on your pre-retirement income as well as your post-retirement income as you think about taking distributions from your retirement accounts and Social Security and those sorts of things?
Yeah, that's correct. And a lot of our clients, you'll see, have multiple homes. You might have a home in New York and a home in Florida or a home in Kansas and also a home in Arizona. And I think a lot of things to think about is when you have two homes, it's not what you consider your tax home. It's what the states consider. And that's really where you intend to be. And spending 190 days in Florida doesn't make it your tax home if you really intend to be a New Yorker. And that's really where all your stuff that we call near and dear.
In the email we received, there's an individual and they are approaching retirement and they're thinking about relocating to Florida. Now you brought that up. And what are the different things that they should be considering? I mean, when you talk about the fact that Florida's got a better state income tax, Florida's got terrific weather most of the time. I mean, it sounds like a home run. So what are the things that people should be considering if they are thinking about changing their domicile?
There's a nice this checklist that you can find online. Mariner has a great checklist that we're happy to forward along. One of the things I think you have to do is check all the boxes for the basic things. Change your address with the post office. Get a new driver's license. Make sure all your bank accounts are changed. Make sure all your investment accounts, all the addresses are changed. One of the other things to think about is if you're going to keep your current home and also have a home in another state is the stuff that we call near and dear to you. Pictures of the grandkids, pictures of your kids, the important artwork, your important jewelry. The states and the IRS will look to see where do you have those important things at. That is really where your home is at. So if you're going to go to Florida from New York, and one of the main reasons is to save on income tax, and you want to still keep both homes, I think it's important to move a lot of those important items. If you intend to keep both houses, one of the things that we've used to help win audits is take pictures of these important things you're shipping and packing to move down. The baby pictures, the artwork, the jewelry, favorite pictures of your kids, anything like that. Take pictures and document it that you're either shipping it down, putting it into your car, or even putting it into a moving truck.
And I know in the past, I've heard you in conversations and on stage talking about the fact that if you have a doctor, your primary doctor, that should probably be in Florida in this example, right? The place you're really looking to domicile and those sorts of things. I mean, everything that you can possibly think of to make sure that you're on the right side of the IRS, if you will. And truly, this isn't a short-term decision. This is a long-term decision. I plan on spending my time, the majority of my time at least, in this area. Is there a rule in terms of, how many days or what this looks like in addition to some of the things that you talked about?
Yeah, so domicile is where you're hard at. There's also something called statutory resident, and that is where do you physically live, and that is a pure days count. And most states have the rule that if you're there more than 183 days a year and you have what's called a permanent place of abode, which is a home or access to a home, whether you rent or you own, that is your statutory resident. So if you happen to be retiring from a high tax state to another state that has a low tax state, you could be domiciled in one state and be a statutory resident in another if you don't watch the facts and make sure you keep your days count under 183.
So when it comes down to that, you say you went through this process. Number one, is there someone you consult as it relates to this process? What does that look like? Is this something you do on your own? What do you suggest?
My recommendation is that you consult with your tax advisor and really have this documented before you make the move so that you know exactly what has to be done. So when you want to move December 1st, you know that as of that date, you are physically out of that state. You don't want to find out 3 months later that you really didn't move till February of the following year, even though you thought you had done everything proper.
In the event of proving all this would be then based upon, you getting your card pulled for an audit, if you will, correct?
Correct.
So ultimately, it's on the individual taxpayer to make sure that they're documenting this accordingly, because at the end of the day, it's going to be up to them to prove whether they've truly changed the domicile or not. Accurate?
That is 100% accurate. The burden of proof is on the taxpayer. And when you get audited, most of the states will send a questionnaire out and asking, when did you move? Why did you move? And then you have to start providing documents. Some of the key things they look for, they'll pull Easy Pass. They pull cell phone records. And if you don't provide it, because it might not help you, they will subpoena the phone company and pull your phone records.
Wow.
So cell phone towers can be key. Along with that, they'll look at your credit card statements. So they will get every month of credit card statements and bank statements, and they'll start looking to see transactions where you say you're in one state, but they see transactions in another state.
And for the purposes of this podcast, these are generally the things to think about, but ultimately each state's a little bit different in terms of how they do this and how they decide you change your domicile and so forth. Is that right? That's
100% correct. There's a general theme with most states on how they look at it and how they audit in terms of record keeping. But again, every state can be, some can be stricter, some can be more lenient on some of the underlying personal fact patterns that aren't either on paper or in days, that are more specific to you, personal nature.
So that's really helpful. So we talked a little bit about the income tax side. Let's move to more the estate tax side. So, estate tax, based upon where we are now in 2019, with the changes to the tax law last year, fewer and fewer people are subject to estate taxes at the federal level, but there are states that are out there that some follow the federal level, the federal guidelines, and others do not. They have their own states. What should people be thinking about as it relates to the estate tax and maybe even the probate process if they are going to relocate to another state?
My recommendation there is once you kind of settled in, it's not an urgent matter, is to reach out to your accountant and make a decision. Should you be meeting with your estate planning attorney to go through your documents? Are the documents you have okay under the new state law, or do they need to be redone? In some cases, if you move from New York or New Jersey to Florida, you don't have to redo it. And then there's other times where you need to, because probate or the trust that you were having created might not make sense under the new state tax law.
And just to back up for just a second so everyone understands, probate is truly the process of proving the will. And so for assets that go through the probate process, and not all assets do, right? There are assets that pass by contract to law, or depending upon how that asset is titled or even how it's held. But generally speaking, every state has a different probate process. And so if you're going to a new state, you just need to be aware of what that looks like, maybe the fees that might be assessed on some of those properties. So again, just something else to be thinking about as it relates to changing your domicile, right?
That's correct.
Thanks again for downloading this episode of Your Life Simplified, which is produced by Mariner Wealth Advisors. And at Mariner Wealth Advisors, we're here to serve as your advocate. We help people chart a course to reach their personal and financial goals so that they can have greater peace of mind that may lead to a more fulfilling life. We do this by always putting our clients first. Because as fiduciaries, we're required to provide guidance that's in the best interest of clients, not in the best interest of a company or shareholders or anyone else. So as you listen to this podcast and have questions about maybe your own financial situation, or would simply like a second opinion, or even you have an idea for a future podcast, please go ahead and email us at podcast@marinerwealthadvisors.com. If you found the information on this podcast valuable, please go ahead and share it with a friend or family member that you think might benefit from this information. And please don't forget to subscribe to this podcast so you don't miss an episode. Thanks for listening, and now back to the episode. So in addition to the estate state taxes and the probate process, what might the financial savings look like by changing your domicile to a state that maybe were tax friendly?
Right. So that's easy. From an income tax, every accountant can go out there and we can run the numbers and show you what it is to be taxed under a new state jurisdiction. A couple other things I recommend my clients should think about. They might not be deal breakers, but the real estate taxes, just because a state has lower income tax doesn't necessarily mean the real estate taxes will be cheaper. Also, sales tax can also be higher. And some of the states that don't have income tax, that's how they make up their state tax revenue. You can also just look at the cost of living and where does that fall into play. And those are kind of the main things outside of income taxes that I would look at.
Sure. So Adam, right before the show, you started telling me about a case that you were familiar with that resulted in somebody not wanting to pay taxes to New York. Can you walk us through that in a little bit more detail?
Yes, obviously New York's a very high tax state and people want to try and avoid it. Things that we've been seeing lately are people working from home. As time changed, you don't necessarily have to be in the office to work. So there is a New York tax case out there where a individual decided to move to, I think it was North Carolina or South Carolina, but still work for his company out of New York. And because he was not living in New York, didn't set foot in New York, he didn't want to pay New York income taxes. New York State did challenge this, and they won. So a lot of the general rules out there for that is if you're working at home for your convenience, for your enjoyment, maybe because your family are there, that doesn't necessarily stop you from paying income tax back to, say, New York in this case. If you're working at home for what we call the convenience of your employer, then you do not have to pay tax, in this case, back to New York. But if you're working at home for your convenience, then you're still working in New York. New York looks at this, even though you're sitting at your home in, I think it's Tennessee or North Carolina, South Carolina, you're still working in New York every day because it's for your choice versus your employer's.
Did the taxpayer continue to fight that?
No. This went to the Supreme Court for New York and he lost the case.
Okay, well, that's too bad. Too bad for the taxpayer. So with all the benefits of changing your domicile to going to a state that has, less income taxes or these other benefits, what's the downside? Are there any drawbacks to doing something like this?
The only downside for moving and changing all this is the potential of an audit. And I think that if you plan ahead accordingly and do the documentation that we mentioned today and make sure you're set and prepared to handle this, then there's really no downside. What most clients don't realize is if you move in early 2019, the audit might not happen for 2 or 3 years. And at that time, some of the documentation or the facts that you had in your head are not as crystal clear. A lot of times when my clients move, I recommend they send me all the paperwork right now, and I will save it electronically. So in 3 years from now, when you need it, I have it at my fingertips versus you having to go into the shoe boxes or moving boxes that you moved and that are all packed away.
And so that's great advice. And I'm sure that our listeners always want to be on the right side of the tax law. Having said that, is there a statute of limitations on changing your domicile and making sure that you have the right paperwork and all that good stuff? So, you mentioned maybe starting the clock, if you will. So in that same vein, is there something that's there that people can look to?
Most states typically have a 3-year statute from when you file. That gives the states the time to audit. That statute is usually intact as long as you haven't done anything fraudulent. So as long as you just moved and everything was documented in your tax returns, typically 3 years. Some states do have some different rules. California's 4. So obviously look at what state you live in and make sure you check the statute.
And it's another excellent point you made about just being meticulous on the paperwork itself and making sure that you have, whether it be receipts or the other documentation, to ensure that you have enough proof should you get that call.
That's correct.
So Adam, thanks for the technical expertise that you bring to the table as it relates to taxes and estate planning. Some other things that, of course, that people want to think about is the psychological aspect of moving to a different place. And so, some folks may say that I want to relocate or change my domicile to Arizona. I want to change my domicile to, say, Florida, because they've gone there 3 or 4 times in the past couple of years and they love it. things to think about maybe are, have you been in Florida? Have you spent a significant amount of time in Florida to really be there for, say, 12 months to understand what the weather is truly like year round, or to understand, if you're closer to family now and you want to be in the warmer weather, are you making that type of trade? So you spend less time with your family, but you might get the better weather, or even, just sort of the way in which you might interact with folks down there. So there are certain places I think that are maybe more accepting of people that are relocating there versus other people that are native to that area. So, different things to think about. So Adam, I want to thank you again for being on the show. Before I let you go, I want to ask you the same question we ask all of our guests. And that is, what is the worst financial mistake you've ever made?
It's related to moving, not changing my tax domicile. But as I started having a family, having kids, I went and bought one house thinking it was my house, for the next 30 or 40 years, to find out probably 2 to 3 years later that my wife was not happy and it was time to move. And I had done a lot of renovations. So I've learned that as you start to have kids and buy that house that you want to raise your family in, sometimes you need to think, 3 or 4 years down the road, 5 years down the road, what might be perfect for you for that newborn baby might not be the answer come kindergarten time.
So Adam, I'm sorry I had to learn the hard way. Hopefully it wasn't too costly, but now being a planner yourself, I'm sure you're not going to make that mistake again. So again, thanks for being on the show. Really appreciate it.
No problem. Thank you for having me.
So everyone, thanks for listening to the show today. I also want to thank our special listener who sent in that question. I hope this not only answers your question, but also promotes the idea that other listeners that are out there, if you have questions, ideas, comments for the show, please go ahead and email them in at podcast@marinerwealthadvisors.com. Thanks again for listening.
Mariner LLC, doing business as Mariner Wealth Advisors, or MWA, is an SEC registered investment advisor. Registration of an investment advisor does not imply a certain level of skill or training. MWA is in compliance with the current notice filing requirements imposed upon registered investment advisors by those states in which MWA maintains clients. MWA may only transact business in those states in which a notice has been filed or qualifies for an exemption or exclusion from notice filing requirements. Any subsequent direct communication by MWA with a prospective client shall be conducted by a representative that is either registered or qualifies for an exemption or exclusion from registration in the state where the prospective client resides. For additional information about MWA, including fees and services, please contact MWA or refer to the Investment Advisor Public Disclosure website at www.advisorinfo.sec.gov. Please read the disclosure statement carefully before you invest or send money. The views expressed are for commentary purposes only and do not take into account any individual personal, financial, legal, or tax considerations. It is not intended to be personal, legal, tax, or investment advice or a solicitation to buy or sell any security or engage in a particular investment strategy. Nothing in this recording is intended to constitute legal, tax, or investment advice. Consult a financial, tax, or legal professional for specific information related to your own situation. There is no guarantee that any claims made will come to pass. The opinions are based on information and sources of information deemed to be reliable, but Mariner Wealth Advisors does not warrant the accuracy of the information that this opinion is based upon. The views, opinions, underlying information, and sources of information are subject to change at any time without notice to you.